Hey everybody, Colin Harper, Certified Financial Planner, HPK Provident Advisors on Friday Live, joined always by Michael Kutch, our Chartered Financial Analyst, the man, the myth, the legend. Mike, great for you to be here today. Just a quick few housekeeping things. First off, thanks so much for joining us. We're getting a lot of great feedback from this, and as you can tell, we've made some improvements and we'll continue to do so. We've got a little studio set up here in the Pittsburgh office. And we've, also kind of updated the branding a bit, but thrilled you're here. Very excited for you to take some time out of your Friday and join us. We do this every Friday at 12:30. As many of you know, we were at our national conference this week and the office was closed. Some awesome takeaways from that, networking with over 4,000 other advisors. And, on top of that, there were over 7,000 people there. Tons of resources and tools, but I want you to know that Mike was still working diligently, fending off the bear market while we were gone. And I got a little clip to show you all of Mike there. As you can see, Mike is still working hard to fend off that bear market. That's the big bear right in front of the Denver Convention Center. Another quick updates I have for you is we've got a couple cool things. One, we're actually doing a giveaway today. And that giveaway, to get entered in, all you have to do is comment on the stream, whatever platform you're on, with HPK Friday Live. HPK Friday Live. There it is, nice and big on the screen. I'll do it again at the end before we collect it. But all you have to do is post in the comments, HPK Friday Live. And we are giving away a little tumbler here. So love for you to get a chance to get that. We would also be happy to throw that somebody's way. So Mike, and before I get rolling, just as a reminder, nothing we discuss today should be considered a specific recommendation. Everybody has their own unique circumstances. Would certainly encourage you to talk to a trusted financial professional about any of these. So Mike, without further ado, let's kick it off to you. I know we had a lot of economic data come in while we were at the conference this week. We talked a lot about it, but let's kind of get everybody up to speed.
Yeah, sounds good. So there was a lot going on the economic front as well as the earnings front. So I'll start with the earnings front. We had those big mega cap tech companies reporting this week. And for the most part, the price action was pretty good. The actual earnings were a little more mixed, pretty much like we've been seeing from the rest of the companies that have reported so far. So a few of the tech giants had decent earnings, while the others didn't do as bad as expected. Supply chains and the dollar were highlighted as headwinds, but overall, demand has pretty much been intact so far, but a lot of them did bring up concerns that they expect that to slow a little bit in the second half of the year. There was some weakness in ad spending. We saw that particularly in Meta, formerly known as Facebook, and Snap, as well as a little softening in the cloud space. Economically, we had that FOMC meeting, and the Fed raised the Fed funds rate by 75 basis points. That was the second time in a row that they did that. The market actually rallied following the meeting, and that was primarily taken from Powell had some comments that in a future date, they will be slowing the pace of rate hikes. And we're likely around neutral right now. So any additional rate hike from here is more in the restrictive camp. But the bond market took that meeting as they're probably not going to go as high on the terminal Fed funds rate. And they see rate cuts happening at the beginning of next year. We also got the GDP number for second quarter, and we did get that negative reading of -0.9. So overall, we saw weakness in inventory spending, trade, and just overall slowing demand. So now with the 2 consecutive quarters of negative GDP, that is considered that technical recession that we talked about in recent weeks. But like I said, when we talked about it, that's not really the true meaning of a recession. Other economic data, we did get the Fed's preferred measure of inflation, the PCE deflator, which it did come in hot again. But as you can see, if you're looking at the market today, the market doesn't really care. And the reason for that is We got the CPI reading a few weeks ago, so we're expecting that number to be pretty high. I would like to highlight that on the employer cost index, that number just keeps surprising the upside. What that likely means is the Fed's probably going to stay on an aggressive rate hike path if the upcoming job numbers kind of match that, because it gives them a little more room.
Mike, it looks like you may have dropped off there, so I definitely apologize for those technical difficulties we're having. We're going to try to get Mike back on here if you bear with us 1 minute. But really what I'm taking from Mike's last comments is, we have, let's see if we can try to get Mike back here. I just sent him a message over on there, but we've got, so what I'm taking from Mike's comments, we have a strong employment situation. Demand is slowing. Mike, we lost you.
Yeah, you kicked me off.
So I don't know if I pressed the wrong button or if it just cut out, but it's glad to have you back. So what I was telling our viewers, what I was taken from your comments is we've got a strong employment situation, demand slowing, but it's not falling off the cliff just yet. And the markets seem to be feeling, fairly comfortable about things. What are you feeling from a portfolio positioning standpoint? And if we have some cash in portfolios, is it time to jump back in?
Yeah, that's a pretty good summary of things, Colin. So yeah, we've had a very strong rally off those June lows, and it's easy to kind of fall into that FOMO, or that's an acronym that people like to say these days, but it pretty much means fear of missing out. So if you're managing any of your portfolio tactically, you spend a lot of your time feeling uncomfortable, whether you're selling it while a rally is happening or buying when others are panicking. You're usually uncomfortable. You don't know whether that's the right decision until after, but in general, it usually pays to take some risk off the table when things get a little hot and to buy when prices are low. So right now, I just look at the risk reward at the current levels we are. And I think the overall risk reward in the market is skewed to the downside. And that's based on both valuations and the macroeconomic backdrop. So valuations are valuations are fair if you believe the forward earning estimates are accurate. But I'm still kind of in the belief system that those are a little too high given the macroeconomic backdrop, which is an aggressive Fed, high inflation, and that's going to cause demand to slow. So yeah, we do have a decent amount of cash in the portfolios right now. So I'm probably not going to add to our cash position at this point, but if that wasn't the case, I would consider adding to it. On a technical front, we're still in a downturn, and we're kind of in the bottom of a range where that previous uptrend broke down. Now, if we get above that level, it could create some support for market, but I think the more likely scenario will result in a better buying opportunity at lower levels. Now, I'm not saying that we're going to necessarily cut the June lows, but I think it's quite possible we revisit them.
I love it. Mike, thank you so much for that quick glimpse into, what we've seen going on, some moves we're making here at a firm level. I'm very thankful we've got Mike on staff who handles all our investment management, which really frees myself, Brian, David, and the other advisors here up to focus on planning topics. And kind of on that thought, I wanted to share just a quick takeaway from Focus. And I think there was a big theme, right? We had the opportunity to network with, 4,000 other advisors, had a lot of great conversations, saw how some very high performing teams run their practice. And one of my big takeaways that isn't necessarily a financial takeaway that I'd like to share with all of you is the idea of being authentically yourself. We saw some gentlemen who from a business standpoint don't do anything really crazy different. They haven't come up with some magic widget, or they don't have the perfect investment management process or planning process, but what they do have is they are authentically themselves. They've really done a fantastic job building a practice where they've earned folks' trust, and they're a trusted coach and partner with those families over the course of their over the course of their lives. And so that's something I'd leave with all of you is that, one, find a financial planning firm or a financial planner that is authentically themselves. Somebody who you can trust, who cares about you and your family. I would say take that away, but also in your day-to-day life, I think it's a great, it sounds very simple, but don't be afraid to be authentically yourself. That's one of my biggest takeaways from our conference, along with a ton of other knowledge points and the like. Well, like I mentioned before, we are doing a giveaway here, and all you have to do, and you don't have to be watching this live to participate, is share the hashtag HPK Friday Live. We're going to be doing a giveaway for a little Tervis coffee mug. I know I run on coffee like a lot of you do out there. So, make sure you do that. And then the other thing too, when we talk about specialty topics or planning, Mike manages the money for us. I'm involved in the planning process, but we also have Brian Peluso, happens to be on vacation, is a Social Security expert. And, I want to make sure for those of you stuck around to the end of the video, I've just posted a comment down here in this video, and, take a look. It'll direct you out of there. It is a free ebook about Social Security. It's 4 free Social Security facts. We'll trade you an ebook for an email so we can keep you in tune on what we have going on. Love you guys to take advantage of that free resource. We'll be doing a lot more ebooks and giveaways and things as we progress through this, but take a look at that in the comment sections. It's a link to download a free ebook from us, and I'll show you guys what that landing page looks like here real quick too, as soon as I hopefully don't break this again. So this will take you to a landing page on our website for Social Security facts so retirees must know. We've certainly had a lot of success with this book. So please take that free resource. Again, don't forget to comment on the HPK Friday Live. We'll do the drawing a little bit later. So just post a comment on whatever platform you're on, HPK Friday Live. We got a lot of tumblers to give away, and we'd love to put it in your hands. So, please like, share. We're here every Friday at 12:30. We really enjoy doing this. As you can see, we've made a lot of upgrades since we started a couple weeks ago. So join us on Facebook or whatever platform you choose every Friday at 12:30 for a quick glimpse into the markets along with a planning topic. And again, like I always say, if you have specific topics you'd like us to address, feel free to post those in the comments too. With that, I will wish you all a very safe and happy Friday. Thank you so much for joining us. And until next week, take care, and we'll see you then. Bye-bye.
Bye.